Hello, everyone. Happy Easter. Today is April 1st, April Fool's Day. It is Thursday, the day rather, before the long weekend. I hope you all have some wonderful plans for Easter. I myself am going to be watching a lot of baseball as it's the tournament. It's a tournament weekend, and my youngest son will be playing in that, hopefully, with a chance to qualify to go to nationals. So we'll see what happens. But in any case, I wish you all the very best of holidays. And on to the top three things today, which are Quad 2. I'm going to talk a little bit about what's going on with Quad 2. We've had a couple of slow weeks on the stock markets, but there's some very interesting things going on. I'm going to highlight that for you. Secondly, the stimulus. So we're getting epic stimulus coming through. I'm going to talk about that and what it means for the setup and where we are at the moment in terms of the calendar year and what I've been talking about in terms of Quad 2. And then finally, I'm going to touch on one of our favorites, which is the VIX. I'll touch on, I'm sure, a lot of other stuff as well, but certainly those at the moment are the top three things. So first of all, we have uh, President Biden unveiling a $2 trillion infrastructure plan in the United States. Now, this is going to be epic stimulus for the country, the United States in particular. And if you're building a lot of infrastructure, guess what you're going to need? Number one, you're going to need labor to do all of this stuff. But secondly, you're going to need an absolute epic amount of raw materials, aggregate, copper, steel, concrete, you name it, they're going to need it to do this infrastructure plan. That is going to put a huge fire under industrials, materials, even financials, all sorts of segments of the market, which I will be doing right after I do this video. I'm going to be doing a position update. So you get both of these things fully loaded for the weekend to consume all of that at your leisure. You have 4 days of chill time to do that. So please, use the time wisely in studying that, plus spending lots and lots of good quality family time. Anyway, President Biden is hitting the button hard here, and I think Congress is going to accommodate that. They need to get the United States back to, or continuing to get it back on the road to recovery. And this is actually going to lead into a number of positive things. Now, I just want to show you a table or a chart if I can find it. Here we go. So this particular table, I've shown this before. It's been probably a few weeks since I have actually shown this. I'm just going to make this bubble smaller since I've shown you this chart. But this is the part 2 of the epic stimulus, which is all of this pent up savings and other pent up dollars that are ready to be unleashed from the consumer into the economy. And so we've got Biden unloading both barrels, $2 trillion. We've got the U.S. population capable of unleashing, I should say, almost $2 trillion worth of spending onto the economy. It's going to set up for an incredible middle part of this year. So we are now officially, as of today, in the second quarter of this year. Obviously, it'll be tomorrow U.S. time. But anyway, starting the second quarter, we're still in Quad 2, and we'll continue to be in Quad 2 for at least the next quarter. And we're going to see some of the best economic data that we have ever seen post-World War II, since post-World War II in the United States, and I dare say probably in Australia as well. A lot of people are asleep at the wheel with this at the moment, and that's evidenced by something else that I show you from time to time, which is this Commitments of Traders report. Now, this is kind of small. You probably can't really see it too well. I'm going to just blow it up here. But the market at the moment is still net short S&P 500, Dow, and even NASDAQ. And so what that tells you is that the market hasn't yet fully priced in this recovery. We had our little spurt in January and early Feb. We've had a bit of a sell-off, some episodic periods of sell-off, but we continue to stair-step higher in markets. And so this is, again, another sign that there's still room to run, because if you look at the max and minimum positions in these particular contracts, you can see that the maximum position over the last 3 years, for example, in the S&P 500 has been 245,000 contracts. And that is when there would have been, over the last 3 years, the maximum amount or the most bullish that people ever were. And again, that might have even signified a market top. But here we are. Now, the minimum, of course, was 318,000 contracts, and that was probably in the depths of the COVID crisis. So they're still negative. They're working off that short position, but we're nowhere near being as bullish as we can be. And I'm not going to say we're headed towards that, amount of open contracts on the plus side, but it's certainly one of those things that I watch, and it just means that the market still has plenty of room to run to the upside. Now, let me just pivot over to, so we've talked about the economic growth and the stimulus. I just want to get back to now a couple of other things, including the VIX. Before I do that, though, I just want to touch on a couple of charts. So first and foremost, we continue to see interest rates rising. Rates are rising. Why? You know the answer to this. I've said it many, many times. It's the I word. The bond market is anticipating and pricing in inflation, and we're beginning to see that across the board. But this is what this Treasury yield is telling us, particularly on the 2-year, and I don't know if I've got a 10-year. Yep, there we go, the 10-year as well. This is an epic bull market in interest rates. So interest rates are rising, and bond prices are falling. So I should actually say it's a bear market in bonds. Interest rates are rising, but the bond market itself, the prices of bonds are falling. So this is one reason why I got the heck out of bonds. I don't know, probably 7 months ago, because this was quite clearly going to be happening in the bond market. It was probably less than that. It was probably about 4 months ago that we got out of bonds completely. We'll buy them back, though, because as we enter the end of this year, rates will probably be topping. But I don't want to get ahead of ourselves. I have talked about that. We'll just have to wait and see what the data says when we get there. Anyway, this is important to note on that. Now, I was going to talk about VIX. So just broadly again, the chop bucket, if you remember, is 20 to 30 VIX. That's where it's a trader's delight. You can, and I have successfully, in my own PA anyway, been trading the volatility of the chop. It's not something I do for personal clients, because that's not, for most of you, that's not how I should be managing your money. It's a little bit more medium to longer term type position holding. But I do, in some instances, trade around some of this stuff if we get just some really, really ripe opportunities. You know what that's called again? Feeding the ducks. Anyway, VIX has fallen below 20, and it is continuing to trend down. The NASDAQ VIX is falling. Russell VIX is falling. Oil VIX spiked a little bit, episodic spike in that, but it will be non-trending. But it's come way back down from, I think the last update I mentioned to you that, oil volatility during the pandemic crisis was in the 300s. So this is nothing. This is a walk in the park compared to where we were a year ago at this time. But in any case, the point is volatility is coming out of the market. It is falling. Again, this is going to set up a very epic run in markets. So a couple of other things just to hit real quick, because I want to make this a short update so that I can spend a little bit more time on the position updates. I'm just going back to my slide deck here. Just quickly, it's worth highlighting gold and silver. As you know, many of you know, I'm a bit of a gold and silver, or have been a gold and silver bug over the years. That's been wrung out of me now. What I realize is that gold, and silver for that matter, are very much tied to interest rates. And that is why gold has been getting basically smacked since sort of late last year, where interest rates began to rise, slowly albeit, but they began to rise, and gold doesn't like that. So gold, as you can see here, has just dropped precipitously. It's down something like 20% year on year. So not a great asset class to have been holding. That's why I don't own it right now. Other markets, there's a chart of the Swiss, the German, and I'm going to talk about this in my position update, because guess what I've allocated some of your capital to? Europe. Who's talking about Europe? No one, right? But the European economies, despite the fact they're having a little bit of an issue with some of the COVID stuff, they're rolling out the vaccine. Their economies are beginning to reopen again. They're starting to see fantastic economic growth, and that's what the stock markets are telling you. But unfortunately, the financial world is very U.S. centric. So you'll hear a lot about the U.S., but you don't hear a lot about the rest of the world. The Asian economies, interestingly, had a bit of a pause, and you'll probably notice, for those of you that are watching your trade reports or any of that sort of stuff, and I will talk about, excuse me, this in the position update. I got out of Asia because China is in Quad 3 at the moment, and that's going to impact a little bit of Asia, the rest of Asia. So I got out, took nice profits there in all the Asia trades, but I may reallocate a little bit of capital now to some specific spots in Asia, specifically South Korea. So they've been going through a bit of a consolidation period, as you can see here on this chart, but they're looking very likely that they're going to be breaking out to the upside again. So probably going to see a bit of upside. Remember, we talk about Dr. Kospi, which is the South Korean index, and Dr. Copper, both two very important indices and markets to watch to tell us what the health of the global economy is doing. And both Dr. Kospi and Dr. Copper are signaling new all-time highs coming down the pike. So I think that's pretty positive stuff. Again, I already touched on the VIX. It's just precipitously fallen. Here back in late last year, the VIX had spiked again in February. These are episodic and non-trending, but as you can see, quite a bullish setup here because the VIX has just been falling and will continue to do so over the coming weeks. Now, one of the quick thing I did want to touch on, which I should have earlier, was this consumer confidence number that you see on your screen here that just got published, I think, last night. This is ripper off the chart consumer confidence. This is going to feed into that narrative that I'm giving you around consumers going out and spending money. So we're going to have the $2 trillion infrastructure spend. We've got $2 trillion of pent-up savings effectively from consumers. And we've got consumers now feeling very confident. This, ladies and gentlemen, is the setup for epic bull markets. And that's why it's Quad 2. That's what we're in. We're in the reflation part of this story, which is, again, Quad 2. And it's going to be a fun ride. And we're going to start to see that really unfolding, I think, during the month of April. As we start to get more economic data reported, more of these data points coming through, stock markets are going to love it. And barring any, major shock or something like that happens, obviously, I reserve the right to change my mind on this if some new data point comes out to cause concern. But at this stage, it is absolutely set up for, again, an epic performance for the next couple of months. That is probably about it. Was there anything else I wanted to hit on for you guys today? I don't think so. Finally, I guess, for those of you that know, I've talked a little bit about volume. And over the last 2 weeks, the markets have been pretty flat, I must say. They've had a little bit of a correction, particularly in the small cap sector. And energy as well has had a tiny bit of a correction. So, but what I wanted to just highlight here real quick is that volume, so the volume in the stock market, this U.S. stock market, has been declining and is down. So this is a sign of basically of capitulation. Volume's down. The weak hands are being flushed out of the market now, and this is again a very clear indication that going forward, we should now begin to see we'll see volume increasing, but this is setting us up for a big move in the market, or a consistent and sustained move in the market. I think that's about it for this update. I will be doing a position update for you, and we'll go through the many positions that we have on right now, with a very heavy tilt towards the reopening of the world and Quad 2. It's a Quad 2 portfolio, no doubt about it. So I'll get into more detail on that. Again, I wish you the happiest of Easters, and I do hope that you take some time off to spend with your family, reassess or assess your happiness and where you are, and hopefully the weather will hold up for us too. We can all get out and enjoy it. So happy Easter, everyone, and I will talk to you again next week. Cheers.